What's going on, guys? Welcome back to the channel. In today's video, we're going to be reviewing the 3 credit spreads that I opened and profited off of this week. If you guys are familiar with credit spreads, that's great. If not, I have a full tutorial on the channel. I'll put it right here on the screen as well as in the description below. Over the last 2 weeks, I'm 7 for 7 trading credit spreads, proving that this is a very consistent strategy, offering you high probability trades every single week. Now, obviously, no option strategy is 100% accurate, but when trading credit spreads, the odds are greatly in your favor. And when most people start trading options, they're either buying puts or buying calls. Now, yes, you can make a ton of money doing this, but by no means is this a consistent strategy for some of you guys out there. Now, what I like to do is I still buy puts and I still buy calls with smaller value, but I like to mix in credit spreads so that I have some consistency in my portfolio. So guys, let's go ahead and get right into the video. I'll dive into the chart, show you all the trades that I made this week. Now, before I roll the intro, scroll down, smash that like button. It'll help out the video as well as the channel. All right, so I got the charts pulled up. The 3 credit spreads that I traded were on Shopify, Visa, as well as Lululemon. So getting into the charts here, right here we have Shopify. This is the 30-day 1-hour chart. So before I entered the trade, I was watching Shopify last week. We all knew that Shopify was making a massive rally. I watched it last week. It stayed relatively flat. For almost the last 2 weeks, the stock has stayed pretty flat, and that's why I started to grow some confidence to sell some premium on it. So I saw here on Tuesday of last week that we broke through the 600 level, sort of retested it, and found support there. So I was continuing to watch this, saw that it had some strength above that 600 level, and I was comfortable maybe looking at a 600 put to sell. So Monday came, I saw that Shopify was starting to sell off on Monday. Now, when the stock sells off, the put premiums are increasing, right? So what would you want to do in that situation? If the put premiums are increasing, if you sell those premiums, you'll receive more money for selling them. So what I did on Monday was I went ahead and I sold the 600 put and I bought the 595 put. So if I pull up the transaction here, you can see that I sold the 600 put for May 1st expiration, which is Friday, and I bought the 595 put for May 1st expiration. Now, how much did I receive for that? What you can see is that I paid $6 for it, so I bought one, so that's $600, and I paid $510 for this one. So I received $600, I paid $510, and I received $90 in premium for selling this credit spread. So watching the stock after I did that, throughout the week, you can see that we stayed pretty flat for most of the week. Tuesday, Wednesday came, even Thursday, and we stayed flat on Shopify around that 630 level. Now, when this trade started to get a little bit dicey was Friday, which was this morning, when some bad news came out. Trump started talking about trade war again, futures fell a lot, as well as Shopify started to fall as well. So we can see on Friday here, we did hit that 600 level. We did break through my max profit line of 600 below that put that I sold, but we found some really nice support off of it, similar to like we did over here, and ended up closing around 618. Now, what happens when the stock stays above the put that I sold? Both of these puts are expiring worthless, meaning that I get to keep that full premium. So both of these puts that I bought and I sold are going to expire worthless, meaning that I don't have to pay any money and I'm going to keep the premium that I sold. So on this trade right here, I went ahead and I locked in $90 for the week. I opened it on Monday, it expired on Friday. So the next one was Visa. So if I go to Visa, if I scroll down, you can see, I'll pull it up on the charts as well. Here's Visa, again, an hourly chart over the last 30 days. So if I pull up the confirmation, we can see that I bought the 182.50 call, which is this one right here, 182.50, and I sold the 180 call. So when I'm selling calls, I actually want the stock to go down. Now, in the previous situation, I wanted the stock to be above that put that I sold. When I'm selling calls, I want the stock to stay below it. So my goal is for Visa to stay below 180. Now, when I look back on the chart, if I zoom out here to a 360, we can see that I was targeting this high right here of around 177. Saw that we had some resistance on that. I was looking at it. This is when I entered a trade here on Monday. So Monday, the stock was trading around $170. I saw this resistance at 177, 178, and I went ahead and I moved Visa. I sold the call a little bit above that at 180. Now, if I go back to the 10-day, 1 hour, we can see that I was down in this position at one time. So on Wednesday of last week, Visa had a huge spike on earnings, went ahead and went through my 182.50 call, and I was down on this position. Now, I still had Thursday and Friday for this to work out for me. When you're doing credit spreads, time is on your side. So I went ahead and I decided to hold it and wait to see what would happen on Thursday and Friday. Now, what you can see is that Visa ended up falling through this. It did not have much support above that $180 level, which we saw previously on that resistance point, and went ahead, fell under it, tried to break it again on Friday, failed once again, and closed the day around $175. So Visa stayed below my 180 call that I sold, and I went ahead and I profited that premium. So if I pull up, if I pull up the transaction here, we can see, if I pull up the calculator, I went ahead and I sold 2 of the 180 calls for 53 cents each. So I received $106. And then I went ahead and I bought 2 of the 182.50 calls. So that's $62. So you subtract 62. I went ahead and I received $44 for making this trade. So I went ahead and I opened it on Monday, closed on Friday worthless. I kept the $44. Now the last and final one was Lululemon. So if I pull up the order here and scroll down, as well as pull it up on the screen. So here's Lulu. So this is again the 10-day or 30-day 1 hour. Pull up the confirmation. So here, 2 of them I sold the May 1st. I sold the May 1st 240 call, which is right here, and I bought the May 1st 245 call as protection. So right here, the red line. So if I go back and I pull up the 360, what I was targeting was this sort of gap right here. There was some resistance here around the 230 level, and I figured that, you know, this 240, 250 area would act as some resistance, and I went ahead and I sold those calls. So I wanted the stock to stay below 240. Now the reason I sold on Monday was because if we go back to the 10-day 1 hour, Lululemon was making a huge run up on Monday. Now that means that the call premiums were getting more and more expensive, in my opinion, becoming overvalued. And when I sell those, that means I want the stock to stay below, and I'm going to be getting more premium because the prices are increasing. So when I sold these calls, I got 59 cents for each of the contracts, so I bought 2 of them. So if I pull up the calculator, 59 times 2, so $118. And then I bought back 2 at 30 cents, so that's $60. So if I subtract that, so that's $58 for Lululemon. So what I wanted to happen was I wanted Lululemon to stay below 240 for me to receive the premium that I sold, which was $58. Now, as you can see, Lulu continued higher, found some resistance here at that 237, 240 area, never went past my 240 call that I sold, and ended up dying here Thursday and Friday. Now, it lost steam. This was actually good for me that Lulu spiked up here on Monday, Tuesday, Wednesday, because the stock was getting overextended. You know, probably would have been better to sell premium here on Wednesday because the call premiums were even higher than they were on Monday. Now, Lulu lost steam, died off Thursday, Friday, expired worthless. Both of these puts expired worthless. So open this on Monday, closed on Friday, expiring worthless. I kept the $58. So if I add up the total, I received $58 for Lulu. I made $44 on Visa, and I made $90 on Shopify. So it's a total of $192 this week trading credit spreads. So I hope you enjoyed that quick overview of the 3 credit spreads I took this week on Visa, Shopify, and Lululemon. My goal for this video was to inform some new options traders out there that are buying puts and buying calls, taking some really high risks, that there are other strategies out there that you can diversify your portfolio with, manage your risk, and still make a return. So if you have any questions on the strategy, first make sure to check out that video in the description. It's a full tutorial of how to trade credit spreads, and leave me a comment down below. I'll answer any questions that you may have. If you want to join my free options trading room on StockTwits, there's a link in the description as well. So guys, subscribe to the channel, smash that like button, Thank you so much for watching the video, and I hope to see you in the next one. Peace.